So she said, as long as Loretta Mester, as long as we don't have a dislocation in the markets, it'll be fine. Do you think that's on the horizon? There, but for the grace of God, go us, John, in this country, if we keep raising quickly, or you think we're going to be okay? Everything's calm.
I think we're going to be okay, but it has to be in a determined way. It can't be just surprises. I think surprises are what the market doesn't want to hear. They want to see that, hey, we got to do a little bit more. The Fed seems to be on its right track. Bank of England seems to be on the right track as well. But we need to hear more of that, I think, so that people are not surprised. I think the danger now is being surprised by moves which are out of the ordinary.
So I haven't seen you in a while, John. It took a long time. I mean, I don't know where you date the accommodation or the emergency measures when they started, I guess, the financial crisis. We stayed at those levels for a long time. Do you think that this is all what we're seeing now and how difficult it's going to be to get out of this? Do you think it has to do with policy mistakes that go back a couple of different Fed chairmen, or do you think the transitory mistake of not recognizing it was happening then, do you think that's where the mess started?
Well, I think that my own view of the Fed was behind the curve. You know, a year and a half or so, it was clear they needed to start raising. They didn't raise. They're now on the way. I think if they just recognized that was behind, and you know, we had a meeting out here not too long ago, how the Fed got behind the curve, what to do about it now. And I think the thing is, it was behind. Other central banks were behind as well, but now they're beginning to catch up. But if they can do it in a way that doesn't surprise the markets, look, the interest rate is low compared to the inflation rate. You pointed that out many times yourself. And we need to catch up, and the inflation rate needs to come down. But I think it come down in a way that doesn't harm the economy. That's the trick. That's what has to be done. And I think we'll be better off if that occurs that way.
You could really be I told you so, John, and you're not that way. And that's gratifying to me that you think maybe there is a way out. Jay, do you think it's not all is lost at this point? Can the Fed walk this fine line and orchestrate? Should we hope for a soft landing? How about just a medium hard landing I'd settle for at this point?
Look, I want to say that Loretta's exactly right on market function. It was important because if markets aren't pricing, we don't have the signals we need to make decisions. But we are really focused on the Fed. And I think we're losing focus on the other important interconnected markets: energy, transportation, logistics, food. We're really focused on the rates of inflation market. They're all interconnected, and they're interconnected globally. What we were seeing with the UK here, I think, was the market saying, look, there's very little that the UK can do on its own here, or stepping out of its interconnected nature around the funding markets in the world. Rick was just talking about the currency. Steve saying how connected it is. Where we need to go, I believe, from a government perspective, is how are we shoring up supply in the energy, in the agricultural and food markets around the G7? That's got to be part of what we're doing here. Just talking about rates is not enough at this point. People in the UK, they're going to be worried about heating their homes and feeding themselves. And I think that the government reaction there is a reaction to that. It's time for the G7 to start stepping up on these issues.